that if and when silver or gold fails to deliver, that will take the entire system down within 72 hours. This is not playtime anymore.
Welcome back to Metals and Miners. I'm your host, Gary Bohm. Today, we're diving into the incredible rise in the precious metals, some of the geopolitical debt and currency issues, and the markets. I'm thrilled to introduce Bill Holter, a highly respected precious metals expert and financial commentator known for his sharp analysis and no-nonsense approach to the markets. Bill, it's an honor to have you back on Metals and Miners. Welcome to the show.
Thanks for having me back, Gary.
All right, so Bill, you've got decades of geopolitical precious metals and market cycle experience. You've been through a lot. You've seen plenty. There's many that have never been through anything like what we have experienced over the last 15 years, or like we're currently experiencing, or definitely like we will experience moving forward. What do you hope those tuning into our conversation today will walk away with after listening to this discussion?
Well, if you're still on the fence and don't really know what to do, I hope this serves as a wake-up call to action, because nobody's going to protect you other than yourself.
That's great. Yeah, that's true. All right, so the price of gold and silver, it has moved so far, so fast, especially since this past August. Are you expecting it to take a breather here sometime soon, maybe around when gold hits $4,000 and $50 silver? Or are you expecting a multi-month sharp decline soon, like some are calling for, more in line with what has occurred in the past when it rose this fast? What do you see next for gold and silver?
Well, frankly, we should have already had some sort of correction, because gold and silver have been in the overbought area for quite a while. It would be logical that gold would stop at a round number of 4,000. It would be logical that silver would be stopped at the $50 number, which was hit in 1980, again in 2011. And of course, the alternative is gold and silver just blow through those numbers. First off, I think it's important to understand that it's not just monetary and fiscal policy that has lit the fire under the metals. You go back to October of 2022, when the 300 billion of Russian reserves were confiscated. The following day is when gold started moving. I think we were, 1670 to 1700 at that point, and it's gold has really been a tractor in first gear. We've not had anything more than a 10% correction during that entire time since late 2022. Silver has been mentioned as a strategic metal by Russia. It's been mentioned as a strategic reserve by the United States. India, just recently, we found out that they've doubled their imports of silver, not in dollar or rupee terms, but in physical ounce terms. So the supply-demand situation on silver is very tight. And I don't know if this is because of year-end, but there's reports of a lot of mints around the world are out of silver. They're not releasing silver. Now, I don't know if that's because we're in the final quarter of the year and they're not making any more 2025s. If we were a week or two into November, I would say that's the reason, but I think this is too early. And my thought process, frankly, coming up to this number that we're at now, very close to 50, my thought process was wondering, will we have a failure to deliver and that blows silver through 50 and wipes the system out? Or do we get through 50 and then all of a sudden the amount of blood in the water, the sharks go crazy and blow it through 50 and create a failure to deliver? I don't know which comes first, the chicken or the egg, but I've been on the record for quite a while, close to 10 years now, that there'd be ultimately the finale would include a failure to deliver of both gold and silver. And it's always been my thought process, because it's such a small market, that silver would be the one to go first. So I don't know. We're in uncharted territory here.
Yeah, and it seems so early to be, when you think about what you just said, that seems to be down the road. So if it's going to happen this early, it seems like we would have more of a prolonged period of that. But Bill, gold is viewed often as a thermometer for the global financial system. In that regard, with gold having moved the way it has since the breakout last March, what is the price of gold telling you?
Well, yeah, you're absolutely right. Gold is a thermometer, barometer, whatever you want to call it. And that is the reason for the last 50 years, gold and silver have had their prices suppressed. And actually, yeah, it's 49 years since 1976 when the COMEX futures and options were created. And I mean, there's all kinds of evidence showing that naked contracts have been sold in mass to try to suppress the price. So yeah, it's definitely a thermometer. I think you have to walk away from you look at the price of gold and you walk away from it thinking, well, something's really not right. Something's not right in the monetary system. Something's not right from a fiscal standpoint. And certainly things are not right from a geopolitical standpoint.
Yeah. So are there some forces or factors that are happening right now that have you really concerned and are leading you to believe that not only this gold and silver move is going to continue, but maybe there's some type of crisis that's headed our way?
Yeah, that's why I was going to mention that to you when you said, are they going to, will gold and silver continue? I think they are pointing to a crisis. And I think it's really important to understand that if and when silver or gold fails to deliver, that will take the entire system down within 72 hours. This is not playtime anymore. We are at the end of an empire. And I mean, the question is, where does the failure start? And I mean, it can start from anywhere. I mean, we could have World War III tomorrow morning. You could have banks going under. You could have derivatives blowing up. I mean, there's so many different potentials to blow this thing up. And I think if you're looking at it from the standpoint of we've got a year, 3 years, 5 years, I don't think that's even possible at this point. This thing is going to come to a head. And I mean, everything that the BRICS has been doing, that tells you right there that the world is moving away from the dollar system. And the dollar system is a Ponzi scheme. And the thing about a Ponzi scheme is once you shut off or slow down the new money coming into it, it implodes. And the new money coming into dollars, it's definitely less and very well could be negative because you've got the rest of the world turning away from dollars and wanting to be in a system where there's free, fair trade settlement. I mean, foreigners are sick and tired of shipping widgets and getting dollars in return because dollars, there's people out there way smarter than you and I, Gary, that have figured this out, and they figured it out before you and I did. That they're getting nothing for their something, and that's not the way people want to trade. That's like if you want to call it anti-capitalism. It's hegemony.
Would you elaborate on your 72-hour comment that you made regarding, I think the way you put it was if gold and silver go down, then it takes the whole thing down in 72 hours, or maybe it was the reverse. If gold and silver.
Yeah, if they fail to deliver, then what is the value of a contract that can't perform? And the answer is zero. And if you zero out a part of the derivative chain, now you have humongous winners and humongous losers. The problem is, if the losers can't pay the winners, then the winners become losers. And think about it from this standpoint. The world runs on credit, and credit is only forthcoming if there's confidence. If confidence breaks, if confidence is gone, and credit stops, nothing in the real world will continue to work. You won't have shipping, you won't have distribution, you won't have production, you won't have anything. And as far as my 72-hour comment is concerned, how long can a person go where every morning you wake up, you're only 72 hours away from anarchy? And I say that because if people don't eat for 3 days, you're going to have anarchy. And if credit breaks, you're not going to get a loaf of bread to the store. You're not going to get tomatoes or beef or anything else to the store. And I've said this for years. The world runs 100% on credit. There's virtually no cash and carry. I mean, think about it. Think about your Walmart. Think about your grocery store. They work on 30, 60, 90-day credit. Think about builders. Think about your trucker. How's he going to get fuel if the gas station and the fuel industry lose credit? Then the fuel's not running. If the trucker doesn't have credit, he can't fill up his truck. Nothing moves. Everything will grind to a halt when credit stops.
Yeah, I see the picture you're painting there. Okay, so Bill,
but that's very real, Gary.
You talk.
That's not Bill Holter's opinion. It's not made up. I mean, that's a fact. When credit stops, everything stops. The real world stops because everything you touch on a daily basis, do this for an hour. Just the stuff that you do on a normal daily basis, everything you touch, credit has been involved in it.
Yeah, no, I agree with you. So, Bill, you talk about, and so do so many others, that the BRICS and others, they're moving towards away from fiat and towards either net settling or some kind of hard monetary asset backing of currency. So we're in this mass changeover of the financial system. Is this something that happens very quickly? Is this a process? And then also, how significant of an impact will it be here in the Western, countries that have been operating in this debt-based fiat system for all this time when this changeover actually occurs?
It'll be far worse in the West simply because everything is based on dollars. Everything's based on U.S. Treasuries. And you're asking whether it's a process or a light switch. We're in the process. We've been in the process for a few years now. When the light switch goes off, that's when you get to that 72-hour window. And I firmly believe that light switch is a failure to deliver, because the failure to deliver tells you that those contracts are worth zero. And that will take the derivatives chain down. And it will also destroy confidence in U.S. Treasuries. How's the U.S. Treasury going to borrow? Their only buyer will be the Federal Reserve.
Yeah, and that's a great point. And, when you think about what's coming in terms of that massive wall of debt that's maturing and needs to be paid or rolled over at these higher interest rates, we've got these ever-growing budget deficits, this massive wall of debt that's coming. The BRICS nations, as you've talked about, they're becoming net sellers of treasuries, net buyers of gold.
Correct.
This setup is really this macro setup is a very dangerous recipe. What do you expect the impact here to be of this setup here, as the massive wall of debt starts to come due here very shortly?
Well, you're already seeing that massive wall of debt come due. Look at the subprime. Look at subprime. Look at commercial real estate. Look at auto loans. Matter of fact, I was watching baseball last night, and I hadn't seen an ad like this in years, but they ran 4 or 5 times. They ran an ad. Are you behind on your mortgage? If you're behind on your mortgage, call us. We'll help you restructure it, blah, blah, blah. I haven't seen one of those ads in years and years. Look at the traffic flow going through Las Vegas. Everything is Everything is shrinking. And what that tells me is we have two economies. We have the financial economy and the real economy, Main Street. And money is getting scarce on Main Street. And we've seen this. I've seen this. Precious metals dealers have seen this. There's been massive selling for the last 9 months in North America. And I pretty much ask every client, why they're selling. And 90+% is because I need the money.
Yeah, so they're paying bills basically here,
right?
Is what you're saying.
Exactly.
Yeah, and that's a shame. Okay, so let's switch the topic here, Bill. China is setting up gold vaults in other nations that are trading partners to store gold close to those countries' homes in order to net settle their bilateral trade. So, most of those countries, Saudi Arabia, India, they don't want to store their gold in China. They want to store it in their own countries. So they're setting up this vault system in their own countries to store the gold so that they can net settle all of their trades and they can keep an eye on their own gold. This is obviously going to circumvent the need for US dollars in all those transactions, which has been the main go-between in the transactions, as well as net settling in treasuries. What do you see as being the impact here? Are we going to see higher inflation back here in the States? What do you see as being the impact of this?
Well, I think the key is in your question, I didn't hear New York or London. And the reason being, the rest of the world understands that it's a fractional reserve system. And they don't want to store in New York. They don't want to store in London. They don't trust the West. I mean, ultimately, when trust breaks, what do? You get a currency. You get a currency and also sovereign treasuries that go lower in value because confidence is lessening. And that on its own is inflationary.
Okay, so that's headed our way. All right, so each major currency financial system crisis of the last 100 years, the 1933 gold confiscation during the Great Depression, the President Nixon closure in 1971 of the gold window, they were followed essentially by a gold revaluation. Is a similar moment upon us again right now?
I think yes, but this is the end of it's the end of this system. It's the end of fractional reserve. It's the end of the U.S. has a credit card with an unlimited balance on it. It's the end of all that. If you go back to 1933, when the gold was confiscated, and then shortly thereafter they revalued gold up 70+% from $20.67 to $35. That actually, it reflated the system, if you will. When I say reflated the system, it made the collateral itself worth more so that there could be lending, that there was room for lending. When Nixon went off the gold standard, the goal was taking $35, sending it to the U.S. and saying, send us an ounce of gold. There was inflation already embedded in the system, and investors knew that, and that's why they wanted gold rather than dollars, because a dollar has long-term only one trajectory, and that's downward, because it's freely printed. It's printed by man, as opposed to gold, which is created by God and has an absolute limited supply. I mean, you have to use capital, labor, and equipment to create a 1 ounce round or a bar or whatever. Gold is only...
And energy.
And energy. Gold is only proof positive that those were used to create that 1 ounce round or bar or whatever what have you. How difficult is it to create $1 trillion? I mean, just go back to 2008. You remember the TARP fight over $700 billion? People were freaking out. Well, $700 billion is, it's nothing today. But what my point being, you can create trillions of dollars for nothing. You cannot create trillions of anything in gold terms. You can't create you can't create it. You got to work for it.
Yeah, no, your point is well taken. So, Bill, China has been increasingly cornering the global market on critical minerals and natural resources for the better part of the last 15 years. Now the U.S. seems to finally be getting serious about critical minerals and metals and the mining needed to go get them, but they're playing catch up. We saw this as soon as, Trump came into office with the rhetoric on Canada, Greenland, and I believe around Venezuela. What's your perspective on this natural resource war that's unfolding and playing out before our very eyes today?
I think it's too late for the U.S. at this point. I mean, we were asleep at the wheel for too long. And I mean, understand that these rare earth minerals, a lot of those are used for military purposes. A lot of those are used for AI and other technologies. But without the rare earths, there are so many things that cannot be done without the rare earths. So, China basically has wrapped that market up. They control roughly 90% of the rare earths worldwide. So, I mean, they can blackmail the world.
Well, I think they essentially did that during the tariff tantrum time period. We started ratcheting things up and they came back and said, we're going to hold back rare earths, and exactly. The United States caved fairly quickly.
Yep. So,
I mean, the world is beholden, right? Unless the West gets their critical minerals somehow. So do you think what's more likely? Are we likely to see mining open up to levels we haven't seen in multiple generations, and they're just finding stuff everywhere and digging it up out of the ground and processing it and getting after it, or war? Which one is more likely?
War is definitely more likely. The best case scenario is that trade opens up, mining. They're drilling, finding metal, mining it. The red tape gets lessened greatly. I mean, that's the best case scenario. History says it's going to be a war,
and that's what you're leaning in that direction, probability wise.
I think so. Yeah.
Okay. Let's move over to the mining stocks here.
That's a high probability.
It's a high.
Yeah, it's not a 50.
Is it a high probability during? Okay, is it a high probability during the Trump term, or in the next presidential term or thereafter?
Well, with the way Trump is throwing rhetoric around, it's probably just as high, if not higher, with Trump as president than someone else as president.
Okay, I mean, so it's likely it could happen here.
His rhetoric, it does play to the MAGA base, but it doesn't play to foreigners.
Okay. Well, I appreciate you putting a time frame around that. So precious metals mining stocks, they've been on an absolute tear in 2025. They've made an incredible run since August. What's that?
I said finally.
Finally,
it's been
yeah.
a long time. Since 2000.
It has been a very, yeah. So since August 1st, they've just gone absolutely ballistic. So many investors, like you're talking about, they've been scarred from the end of the last bull cycle in 2011, and the way the mini runs in 2016 and 2020 unfolded up and down, it's really left people, very scarred. So they're constantly worried about a crash in the mining stocks coming. That said, the cycle is so different than any of the previous ones for so many reasons. What's your perspective on the run-up of these miners that they've had and what comes next for them?
In my opinion, this is not even jacks for openers. And the reason being, miners learned their lesson in 2011. They got fat, they were spending money, they were wasting money. You've got, companies are much, much leaner, and this last 10 to 15 years is directly in the front of their mind. So I think the margins are going to be huge. And actually, I did an interview earlier today and kind of brought up some really old history, like 100+ year old history. If you go back to the late 1800s, early 1900s, because the price of gold was pegged at $20 and their cost of production was very well known, mining companies actually were treated like utilities are treated today, because they were paying good dividends. They were stable businesses, and I think that's where we're probably headed, toward a some type of number. And I don't think the number even resembles anything close to where we are, but some number on gold, some number on silver that becomes the new benchmark, if you will, that we don't stray too far from that. And I think it would be easy for the BRICS to do that. My past partner who passed away, Jim Sinclair, used to say, what's from keeping China saying $50,000 bid on gold, $50,000 offered, what do you want to do? And I think we're going to get to a point where the price is going to be, if you want to call it, pegged. I'm not exactly sure how that would be done, but I think we're going to get to a price, and then people are going to start doing calculations differently on mining companies than what they're doing right now. I think they're going to look at mining companies as a stable cash producer, and something that's not being rewarded right now that always was in the past, prior to 2011, was reserves in the ground. I think it's my belief that mining companies that have big reserves in the ground are finally going to get paid for those reserves, because for the last, since 2011, since that peak, nobody cares one whit about how much is in the ground. They want to know what the production is right now. What's the cash flow? What's your cash burn? What's your cost of production? That's the primary way to value companies now. And I think that's going to change, and we're going to go retro to the way mining companies used to be valued, and that's based on how many ounces in the ground do you have, and how likely is it?
Yeah. So where we
find more ounces.
Yeah. So where it's been overwhelming majority eyeballs on tech and bonds, we're now going to get a significant rotation of eyeballs from the investor community back onto natural resources, mining companies, et cetera.
One set of those eyeballs would be Goldman Sachs. Goldman just came out last week or the week before and said, we're no longer recommending the 60-40 mix. We're recommending 60-20-20. And to go from 0 to 20 in the gold sector, that's got to be a lot of money.
It's insane. At the very least, it should get a lot of those portfolio managers that have 0% allocation off the bench, right? And to have some type of allocation, which to go from 0 to 10% is a huge jump. All right. So within this precious metals bull cycle, Bill, there's an investor element that didn't exist before. It's a significantly large cohort that they just seek volatility and risk everywhere. Like cryptos, NFTs, if you remember AMC, the way that spiked, they're seeking volatility and risk, right? So silver, it's more volatile and risky as an investment than gold. So as silver usually moves further and faster, but just near the end of the bull cycle, do you expect the action this time around in silver to get more volatile and crazy compared to the previous cycles because of this cohort that is chasing risk, like NFTs, crypto, AMC, et cetera?
Yeah, you're talking about momentum traders, and yeah, absolutely. The momentum is going to come into silver, but the problem with momentum coming into silver is it's such a small market. I don't even know what the number is now. I'm guessing it's probably 35 billion per year total production, total global production. What do you got? 800, call it 40 billion. 800 million ounces times
800 ounce. Yeah.
$50. So you're talking about $40 billion, which is not even it's not even a lettuce on a ham sandwich in today's financial world. And the fact that it's such a small market has always led me to believe that the market that would break first, when I say break, the contracts not deliver, would be silver. You mentioned NFTs. I just posted that on my website last night. There was an article talking about how NFTs are largely going unbid now. Well, what did people expect? If you pay something for nothing, how do you expect to get something plus a profit or anything at all back if you're trying to sell nothing? You've got to have a greater fool than you are. And if you put money into an NFT, which is nothing to begin with, well, you're the fool.
Yeah. All right. So I just want to ask one question about the general markets here, Bill. The Trump administration is pulling every lever in order to run the economy hot. They want to have economic growth to outpace the growth of debt since Doge and austerity failed. And let's be honest, it's really impossible in this political environment to have any kind of austerity. Nobody's going to go for it. So with that said, as they're pulling every lever, are the markets going to melt up like the dot-com boom and maybe worse?
There is a significant chance of that, but I don't think it would last much more than a month or 2 months. I think it would be a flame-out rally, if you will. The bottom line, the ultimate result is hyperinflation because the currency dies. And all you have to do is look at Weimar Germany, look at Venezuela, look at Russia in the 1990s, look at Zimbabwe, look at these countries that have blown their currency up. What was it, last year or the year before? The best stock market in the world was Zimbabwe in their currency terms. And what happens is, you get when the currencies blow, you get a scare in the markets, and they'll drop 25%, 50% even, and then they stop going down, and then all of a sudden they turn around and they start going straight up. But they only go up half as fast as the currency goes down. So you don't lose everything, but you lose purchasing power. Now you compare that to gold. Look what happened to gold in Weimar Germany. What was it? 3.7 trillion Reichmarks for 1 ounce of gold. And at one point in time, I think the number was in 1916 or 17, there were 170 Reichmarks per ounce. And it went from 170 to 3.7 trillion in 6 years. And that's without computers.
Yeah, and I think, to your point, wasn't it something like a couple of ounces or whatnot could buy an entire city block? A couple ounces of gold would buy you a city block.
The story, and I think there is some validity to this, was that a bellboy in, I think it was Munich, was tipped 1 ounce, and he saved that 1 ounce. And as time went on, things got worse and worse. The currency debased, and of course, ultimately they redid all the debt in grams of gold. So the banks didn't get killed. It was the borrowers who got killed. But that bellboy ended up buying the hotel that he worked for with that 1 ounce of gold.
1 ounce of gold. That's amazing. All right. Well, I want to welcome everyone who's tuning into this fantastic interview with Bill Holter, precious metals and markets expert. Before we wrap up here, I just want to direct everyone who's interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join the quickly growing community. You're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio. That's also the name of the report you'll get. I'm also positive that you've been enjoying the conversation Bill and I have been having. Please let him know. Hit the like and subscribe button and leave a comment below the video. All right, Bill, would you just share a key takeaway that you want all the viewers who are tuning in to keep in mind, and then let everyone know where they can learn more about your work and how they can connect with you?
I guess the key takeaway is how we started. No one's going to protect you other than yourself. No one's going to protect your family other than you. So if you're not proactive, and if you don't protect yourself and you get wiped out, cleaned out, and end up like the masses, whose fault is that? I mean, who is it to blame? I mean, step up and take action to protect yourself, your family, your position. If you want to follow my work, my website is billholter.com. If you can contact me through there's a contact button on the website. If you want to go directly to my business email, it's bholter@proton.me.
Wonderful. I'll have all the information up on the screen and in the description area for everybody to click through. Bill, thanks for coming on to Metals and Miners. It's always so much fun to spend time with you. You've been so generous with your time, analysis, and ideas, and we really appreciate it. We look forward to having you back on sometime soon. Everybody else, thanks for watching.
Thanks, Gary.
I just want to direct everyone who's interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join the quickly growing community. You're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio. That's also the name of the report you'll get.